Welcome to the Strategy of the Week presentation for 15 November 2013. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. With the recent pullback in market action, it's once again appropriate to talk about protecting profits. We've covered the topic of protecting profits in the past. This week we'll add another tool, a new tool, with the Midas Touch. Tonight I'll demonstrate an easy method of catching stocks when the momentum breaks down in this week's strategy presentation called Protecting Profits with the Midas Touch. We'll begin our presentation here at the market timing graph, where we have the default layout of the price of the VectorVest composite with its 65-day moving average in the top graph and a subgraph for each of the components of the market timing system. I'm going to left click and drag across to zoom in to this most recent market turn, just at the far right edge so we can see some more detail of this most recent market action. If I overlay our green light buyer timing signals, we can see this last cycle began with our first green light here on the 11th of October and ended just recently with a confirmed down call on the 13th of November. And so this turned out to be a relatively short-lived market turn of about a month. In fact, the market peaked just 15 days off of that original signal. If we put on our high-low markers, we see the market peaked here on the 31st of October. And so after that peak, as the market pulled back, resulting ultimately in the confirmed down call, we started getting more red and yellow lights in the color guard. And the question is, how could we have protected our profits during this retreat? To illustrate what I mean, let's move over into the stock viewer. Our first green light was 11th of October. So let's bounce back to the 11th. And this will reset the stock viewer as it appeared on the 11th of October at market close. I'm going to run a quick test of the top 10 stocks listed here by VST order through the confirmed down call. So let's just quick test the top 10. And we'll have to roll our date back to the confirmed down call of the 13th. And we can see ultimately not too bad result. Overall, we had a 4.5% gain, which annualized to a 50% gain. We had 7 winners and 3 losers. Our biggest losers were not dramatically large. Our largest loser, LCM, at 8.5%. So in and of themselves, not a bad result. But let's move this to the side a little bit. And let's run another quick test. But this time, instead of coming through to the down signal, let's go to the portfolio peak performance, which actually happened on the 24th of October. Here in this quick test result, we can see that we actually got to a peak of 10.75%, annualizing at 300%, with 100% winners. And so if I line up these two quick tests side by side, and I'll sort them alphabetically, this illustrates the dramatic opportunity you have. For instance, EBT was up to 11.5%, closed at a 4% loss. FNP, an 18% gain, fell all the way to 1.75% gain. LCM turned a 5.5% gain to an 8% loss. RCR, an 8.5% gain to a 0.25% gain. SKE, a 2.7% gain to a 2.7% loss. And finally, TTN, an 18% gain to a 5.77% gain. So how can we minimize these pullbacks? Well, in the past, we've suggested techniques like tightening stops when the market trend starts to weaken, or tightening moving averages or trend lines, or never give back more than half your gains, etc. Tonight, we're going to add one more tool to our tool belt, one that Dr. DeLito mentioned in his Views essay from the 20th of September 2013, titled Making Money with the Midas Touch. Here's a slide with a relevant quote. I also discovered that the Midas Touch not only gives me a great way to know when to buy a stock, but it also gives me a great way to know when to sell. The key is the 40-day moving average of relative timing. If it has peaked and is heading lower, I'll add price to the graph. If price is below a recent high and trending lower, I know it's time to protect and or take profits. And again, that's from the views on the 20th of September in the U.S. product and I offer that for your own review. Of course, we also did several presentations, strategy presentations related to that Midas Touch graphing tool. So our next step is to set up and review the Midas Touch graph layout. Let's go back to the stock viewer. Here we are back at the stock viewer on the first green light on the 11th of October, and we're going to graph the top 10. So I'll change my tool to 10. Click on that, and we're going to graph the top 10 stocks from the stock viewer on that day. And we're in our standard VectorVest configuration layout. So I'm going to go to the Layouts tool, open it, and we're going to put on the Midas Touch graph layout. Closing my Layouts bar. Let's go through the components and the logic of this layout. The Midas Touch layout gets its name because it originally was designed as a study for looking at gold stocks. In particular, as a timer for gold, looking at the Huey index. Well, broadly, gold and other precious metals have a lot of volatility in their price action, and so this layout was designed to take out some of that noise, if you will. And we did that by using a pair of moving averages of stop price. So as you know, stop price is a adjusted 13-week moving average of price. So now we're taking a 10 and a 65-day moving average of that moving average. So that's really smoothing out that price action. And then on our subgraph, we have a 40-period moving average of relative timing. Again, using a moving average smooths out some of the noise in RT, and a decline in the moving average is a sure bet the momentum has broken. And indeed, if we add RT to the graph, again, this would be a moving average of 1, is the indicator, we can see indeed that as RT was hitting a series of higher highs, we had the slope of that moving average rising. Of course, as that slope changed to a negative slope, there's a lag built in, because as a 40-period look back, it lags the actual movement a little bit, and for this reason, you can play with this a little bit and try shorter term moving averages if you want something a little more sensitive. Another possibility could be that if I take off RT, if I add another moving average, say a 10-period moving average, I might incorporate the use of the 10-period crossing the 40-period as an alternative method to signal the breakdown in that trend. So I offer those techniques as possible variations on this theme, but for tonight, we're going to focus on the methodology as Dr. DeLito expressed it in his essay. So let's take off the short-term moving average of RT. We're going to take off the moving averages of stop price, and we're going to put on price. And we're going to set our time frame so that our left edge was at that first green light where we had our stock viewer set on 11 of October. And our goal is to minimize as much of this give back as we can. And the technique is very simple. We look for the first pullback in the RT moving average. And as Dr. DeLito wrote, if price is below its recent high and trending downward, then he knows it's time to take profits or protect his position. Now, because we're in the Australian market and all of the stocks that were in the top 10 VST stocks are single digit in price, save one, I'm going to use a relatively tight methodology and simply set a stop loss at the low for that day. And of course, maybe you could go a penny below if you wanted. But we're going to set the stop based on that price action, and you can see then that we would have stopped out within a couple days, and that would have been the maximum of our loss. If you tend to trade larger cap, safer stocks, you might do a variation on that theme where you go to the last pivot point perhaps and set your stop loss at that point. But using this method of setting the stop at the intraday low, I would then go to my brokerage and I would set a stop loss order at that day's low price, which in this case would have been at $3.08, maybe $3.07. If it continues falling, I'll stop out. If it rebounds, however, I can let it run. And in this case, we would have stopped out at 308 instead of the confirmed call day's value of $2.85. So let's run through the balance of these 10 stocks and do a little what-ifing. What would have happened had we employed this methodology? Here we turn to EBT. Here I have the first pullback in RT. Now we're not coming off of a high, but even so, had I chosen to establish a stop loss here, we can see the price continued to push forward from that point. If we go to our crosshair cursor here, it's not until the pullback from the next peak where we would actually set our stop loss. Price is coming up off of its high. I set my stop loss at today's low. We can see I would have hit my stop loss the next day and of course avoided all of this pullback. Next, and we'll be able to speed this up as we go here a little bit. On RCR we see a pullback here on RT at this point, so we set our stop loss at that low. Price, however, continues to march forward, and RT doesn't pull back again until this point, where again we set our stop loss and would have stopped out the next day. On our next graph, LCM, this is a good example. I'm looking at the plotting of the moving average line. The value, if I click a date line here, the value for that RT moving average is rounded to 2 digits. So even though I click day to day, the value stays at 1.60. You can see that RT did drop and the moving average line fell back. So I did an either or. I said, okay, well, if you didn't discern that and set the stop loss here, then you certainly saw the next drop, which was here, and set your stop loss here. In either case, you still improved your performance by not suffering the pullback. Moving on, we next come to TBR. TBR has a nice uptrend here. This is almost textbook. We pull back in RT, set our stop here. Nice trade. Moving ahead, we come to GBX. This is an interesting trade. We actually bought in while RT was falling. So we obviously didn't use the Midas Touch approach to take this position, but nonetheless, RT was falling. We had a pullback in price. Here we set our stop loss and would have stopped out the next day. And so here's the one trade of the lot, I think, where we might have left some money on the table. Of course, nothing's perfect, but I don't need it to be perfect. I just need to work more often than it doesn't. Here on REA, we see a nice uptrend. We pulled back. RT pulled back. We would have set our stop loss here. It would have taken us out on the second day, it looks like. TTN, again falling RT at the outset, but if we had chased price, we would have chased it up the hill until we finally would have stopped out at this price level. Moving ahead, just 2 more to go. SKE, we chased it also up the hill until finally stopping out. Moving ahead, our final stock, Bank of Queensland. Nice uptrend. We finally had a pullback in RT. So we set our stop loss here. Looks like we bounced off that support. And so we were able to let our winner run. And there you have it, a very simple method to identify shares whose trend strength is fading. You can simply put all of your stocks into a portfolio or into a watch list and simply look at their graphs on a daily basis and look for that pullback in the RT moving average value. If you see that pullback, add price to the graph and then set your stop loss accordingly. And so I encourage you to add this graph layout to your stocks. Do a little bit of what-ifing. You can use this as is or customize it to your own liking. That'll conclude our presentation for this week. I appreciate you being with me, and I hope you can join us again next time for our Strategy of the Week presentation. In the meantime, if you have any questions, please feel free to call us in the product support department, send us an email, or of course visit the VectorVest University for other free tutorials. So until next time, have a great week.